Welcome back after lunch. Hope you're well caffeinated and won't suffer from food coma as we get started here. I have the pleasure of hosting Rocket Lab here on the stage with me to kick off the afternoon session. Adam Spice is the CFO there. I'll let Adam tell us a little bit about his background and himself and how long he's been with the company as we kick off. And then Adam, maybe right after that, just in case somebody in the room has been living under a rock and isn't aware of what you guys do, why don't you give us I don't know, a 1 or 2 minute overview of the company and the state of it these days?
Sure, I'm happy to do that, and thanks for having me. So, yeah, my background's a little bit unusual, I guess, for aerospace. I came out of a 25-year background in semiconductors, starting my career at Intel in the 90s, and then Broadcom in the 2000s, and then MaxLinear in the 2010s, and then met with Peter Beck in 2017, where he articulated a vision where, hey, he wants to create a true end-to-end space company, leveraging off of the first product, which is Electron, and I'll talk a little bit more about that. But ultimately, with the goal of being able to put very cost effectively and very quickly assets in orbit to create a recurring revenue kind of service model. So everything that we've done, at least in the almost 7 years I've been with the company, has really been all about kind of pushing that end goal of end-to-end space systems and space capabilities. We've acquired several companies along the way. But just to back up a little bit further, so yesterday we had our 60th launch of Electron. So it's a small dedicated launcher. We fly that both out of New Zealand and also out of Wallops Island, Virginia. It's certainly by far and away the market-leading small dedicated launcher, which is an interesting market. It's one that I think you could safely describe as somewhat niche, but interesting, and really kind of created the bigger opportunity that we're bringing to market later this year in the form of Neutron, which is really what we think the first real competitive vehicle to be positioned against Falcon 9. So Neutron is a vehicle capable of 13-ton to low Earth orbit, reusable vehicle. Got some innovative design features that if you go to our website, you can kind of take a look and see. It looks a little bit different than a Falcon 9 because it was designed from day one to be reusable. So this is, I think Falcon 9, phenomenal vehicle, really hard to find fault with that vehicle. But it was really kind of the recoverability or reusability of that rocket was an afterthought, and they cleverly found their way to do that, and that's really what's allowed them to scale. Most launch vehicles, kind of tap out in the maybe high single digits, low double digit launches. Last year, Falcon 9 I think launched 134 times. So we've certainly got a very capable competitor to go chase in the market, but we really do see SpaceX as that primary target as a competitor. But what's a little bit different is, they're further ahead in their evolution, where they've taken that strong position in launch and leveraged that into a recurring revenue applications business in the form of Starlink. And so while we haven't announced what the ultimate end application for us is, our space systems business, which actually represents roughly 70% of our revenues, is really I would say, like the incubator for the capabilities ultimately that we need to put those assets in orbit for ourselves down the road and create a much, much bigger, much more interesting business even than we have today. So hopefully that provides a little bit of context.
Yeah. Okay. Great. So Electron 60 launches. Do you know how many other companies other than SpaceX have gotten to 60 launches?
Well, I believe ULA has done about 170 launches. That's been across a much longer period of time.
It's like the 1950s or something.
Yeah, it's long. It's a longer time horizon. But we are the second most frequently launched vehicle in the Western world. So we launched 16 times last year. The prior year was 10, so we've gone from like 10 to 16 to this year. We've got a manifest that supports well over 20 launches. Our ability to deliver against that manifest is really, it hasn't been a function of production because we've been able to produce the vehicles, but the nature of, and the reason why people pay such a premium to be on a dedicated launcher like ourselves versus being on a ride share and others is because of the flexibility that provides. So, if they have an issue in the late stages of testing on their spacecraft, they're not going to miss the bus, right? So they're paying for that vehicle to kind of be there when they're ready, and also to go to very unique, orbital destinations. So that's kind of how we've carved out our position there. But there really is no other kind of high frequency launch provider in the U.S. After SpaceX and us.
Right. And you described Electron as being a bit niche. Why is that?
Well, if you think about what, the vehicle's proven to be very effective at doing what we call pathfinder missions. That's where you're deploying some new technology in orbit. You want to see if it works. Um, but when you really want to go into deployment for a large constellation, if Electron can deploy like, constellations of maybe up to a couple dozen satellites, with individual either one or two satellites per launch. But if you want to, it's not timely or cost effective to do like 30 launches for one constellation customer. So you want to batch those and put them on larger rockets. So really, that's what Neutron comes in. Neutron is really our constellation deployer.
Okay.
And Electron will continue to be a very interesting kind of need filling product. But again, probably focusing more on the more bespoke markets. Earth observation is a big part of our overall kind of customer demand for Electron. Probably represents about 60% of our launches are Earth observation, because typically those constellations don't require hundreds or thousands of satellites. They require kind of a handful or a couple handfuls of very capable and many times smaller spacecraft.
Right. And let's see here. We had Firefly on the stage this morning. They're talking about their Alpha rocket as having, I think, a payload capacity, was it 100, or excuse me, 1,000?
Yeah, it's about a ton.
Yeah, about a ton. How does that compare to Electron?
So Electron can deliver 300 kilograms to low Earth orbit. So think about that, the size of roughly, when all the arrays are kind of stowed away, about a refrigerator-sized payload. And that's where we found to be we've so far, at least we've seen to be the volume of the market is in that kind of 300 kgs or smaller.
Yeah.
We haven't seen a real big, we haven't seen like we've lost a lot of opportunities in actual payloads that have launched in that kind of between 300 kg and 1,000 kgs. I mean, that could change. I think that, the ecosystem is changing very rapidly around us. But we think right now Electron is still the right size for where we think the greatest market demand is. And then as the market continues to evolve and these things that we kind of put up on orbit as pathfinder missions transition to full constellation deployments, that's really where it goes to a Neutron.
Yeah.
Right. Or today it's been transitioning over to a Falcon 9. So look, I think there's plenty of room for different types of vehicles in this market. There's this 300 kg Electron. You could have 1 ton, kind of the smaller, but I'd say on the large side of small launch. And then you've got Neutron at 13 ton, and you've got Falcon 9 at 16.5 ton. You've got Falcon Heavy much larger, and you got New Glenn, and now you've got Vulcan.
Starship.
So there's a whole bunch, and of course Starship on the very far end of that.
Right. Okay, great. Let's see here. Maybe moving over to Neutron. You mentioned a launch this year. Maybe get everybody in the room up to speed on. Let's see here, the development timeline, what you've announced thus far on customer count and missions and the manifest and backlog for that vehicle.
Yeah. So I mean, I was, I guess I don't say fortunate or unfortunate enough to join Rocket Lab after the first test launch of Electron. So I wasn't there during that whole, bring the vehicle together from concept to production. But I can tell you, having been involved in the Neutron, it's an amazing orchestration of different kind of skill sets and demands on the organization. It's amazing that these things ever come together. And when they do, they often come to market very late, right? So if you look at, for example, the New Glenn launch that happened last month, that vehicle was originally supposed to launch in 2020. So it's about 5 years late. So these things are incredibly, and that's without any capital constraints, because I think Blue Origin had the benefit of having obviously a lot of financial access. So we've said that the vehicle, the goal is to launch no earlier than middle of the year. We kind of put that as our no earlier than, but that's also our target date to get the vehicle to the pad. A lot of things have to go right in order for that schedule to work. And so far things have gone well, but it only takes one thing in a rocket program to set you off course. We saw last year when ULA was bringing Vulcan to market, they had an issue with their Centaur upper stage, blew up on the test stand, caused them a 6-month delay. So you just never know. You start every day thinking that, or planning that you're not going to have a fire on your test stand, you're not going to blow up a tank and so forth, but this is a rocket after all. So right now, green light schedules have us, still sticking to the schedule that we've communicated, but it's a rocket program. When you look at the demand environment, we worry about a lot of things, including things blowing up. We really don't worry about demand. I mean, there's such a a scarcity in the market right now for that medium lift capability. If you think about the fact that there's a lot of customers who are in very uncomfortable positions, whether the U.S. government and they don't have choice, right? And they need to have choice for national security reasons. If you're a constellation operator that competes with Starlink, you're very uncomfortable launching on your competitor's platform. So the combination of the government, the commercial markets, all needing the capacity, and really we think right now, kind of real other viable competing medium class launch vehicles coming to market create a really unique opportunity for Neutron. The dance that you do is that it's just as dangerous for a constellation customer to sign up for a launch on a vehicle that doesn't exist yet, as for the launch company to sign up for a customer whose satellites may not show up on time. So you both have to kind of look each other in the eye and do that kind of death stare and say, okay, are we gonna jump off this cliff together? Because that's really what you're doing. And so, we were successful earlier this year, I think late last year, with the timing of signing our first customer for Neutron.
Yep.
And that won't fly on the first launch. The first launch is a test launch. It won't be carrying any customer payloads. The goal for that is to really kind of, obviously see how the vehicle's performing. We won't do a recovery on that one either. The plan right now is to do a soft splashdown. So the plan is to re-enter the vehicle back into the atmosphere, hover over the water, and then kind of just put it in the ocean. The reason for that is you don't want to damage your barge, right?
Yeah.
Which is a very expensive platform. And you also don't want to incur an FAA anomaly investigation, right? So we will attempt a booster landing with Neutron as soon as we're comfortable, hopefully after seeing the results from the first test flight later this year.
Right.
So that's kind of, so again, we have a lot of different customer engagements for Neutron across government and commercial markets. The demand scenario is very robust, but it's really kind of that dance, right? Because it's almost like once they see that you've had a successful flight, it's almost too late, because just given the timelines to line up, then they got to get in line with everybody else. So it's like the people that are kind of willing to lean forward the most, and of course we have to be leaning forward with them as well. It's kind of where things come together. But we've announced right now the cadence of first launch this year, 3 launches next year, and then 5 launches the year after that, which really mirrors our experience on bringing Electron to market and looking at other launch vehicles. Of course, the goal for us would be to kind of either towards the tail end of that or in the years subsequent to that, really scale much, much faster. Because if you look at the cadence that SpaceX was able to achieve with Falcon 9, it took them around 5 years to get to roughly 20 launches per year, which is good. It was kind of, it's on the fast end, but not unheard of, because we've done the same thing with Electron. But to scale to the 130 launches per year, that really got triggered by reusability, because then you go out of making a booster for every single mission to now you have a fleet, and that supercharges your financials too. Your margins expand very quickly, because now you're amortizing that biggest expensive booster over multiple launches versus expending them. So that's kind of the current kind of plan of record for us to go out and kind of bring this vehicle to market and hopefully get to reusability as soon as possible, because that also lessens the capital demands on the business, because we don't have to kind of, every time you put a booster in the water, that's going to be, you'll hear me
CapEx.
crying from Long Beach.
Yeah.
Right, every time that happens. So hopefully it only happens one time. We'll see.
These will launch from Wallops, is that right?
Yep.
Okay. And the idea is to come back on a barge. We're not landing them back at the pad.
So ultimately, the plan is to return to pad. Now that comes at a cost, because you're using more fuel to direct it back to the pad. So in a return to pad configuration, we're estimating about 8 tons of capacity versus 13 ton for downrange.
Oh, wow. Okay.
So we would, the first incarnation of that is, again, landing on a barge several hundred kilometers downrange, much like a Falcon 9 does. If we want to put it into expendable format, it's about 15 tons of capacity.
Okay.
So you've got some range to play with there. But yeah, the plan right now is to do downrange landing and then eventually do return to pad, which would create a much quicker turnaround time, obviously, and it lowers a lot of your expenses as far as kind of operating the barge and kind of bringing the vehicle back. But that's something that still requires more development.
Okay, great. Maybe we can talk. So I think we got a pretty good sense of the 2 products today, and you haven't announced any further product development on the launch side. It's those 2 things at this point, right?
Correct.
Okay, great. Let's dive a little bit more then on the customer side of things in launch. You talked about what was the word you used? The types of missions on the
Like Pathfinder
Pathfinder
and
missions. Thank
bespoke.
you.
Yeah.
Yeah, the bespoke missions. So maybe give us an example of a typical or maybe a well-known customer on that side or a customer that's kind of come back for multiple launches and kind of describe to people what those missions look like and who the typical customer is there. And I think, most importantly, kind of really dwell on why somebody would go with a dedicated launch versus a big rideshare.
Yeah. When I joined about 7 years ago, it was a lot of just one-offs. And now what we're finding is we're signing, constellation customers, again, I'd say primarily in the Earth observation space, because it works particularly well for Electron. But for example, yesterday, Black Sky, right? That was, I'm not sure, I think that was, I think it's approaching 10 launches for them. We signed up a 10 launch deal with a company called Synspected, which is a Japanese Earth observation company. We signed a large multi-launch deal with a company called Kineis that we've launched recently for. So these are typically satellites that are in the, call it 150 to 200 kg size. Sometimes they're smaller, and we could put multiple satellites on those. The current generation of the BSG-3 that we launched yesterday is a single satellite. The prior generation BSG-2, we could fit 2 on. So it really just depends on kind of the application, whether it's for example, if you look at a synthetic aperture radar satellite, they have much larger arrays that require more more volume, not necessarily mass, but volume. So it just depends on what applications you're going for. But more and more, we're signing multi-launch deals that span multiple years. And so exiting Q3, and we'll have our earnings call next week where we talk more about backlog for Q4. But we exited Q3 with 39 Electron launches in backlog, and we've continued to sign up more customers. So the demand environment for that product is very strong as well. And like I said, probably 60% of that is Earth observation in one way, shape, or form, whether it's SAR, electro optics, SIGINT, so forth, all different modalities of Earth observation.
That's 60%. What's the other 40%?
So the other 40% would be, we've done comms customers before, and now HASTE hypersonics test is probably the fastest growing part of that Electron family of small dedicated launch. And that's where we work with our U.S. government's prime suppliers to provide the launch capacity into those hypersonics tests. And what we've been able to bring to that market was, previously you'd see them typically launch those on a Minotaur from Northrop. Cost of those would be 3 to 4, maybe 5 times the cost that we charge for Electron, and their cadence was much lower, so they could offer those maybe a couple times a year. So the programs were infrequent, they were expensive, and now we've been able to offer up, look, if the government customers want to launch monthly or greater for HASTE, we could certainly support that, which is kind of new to the market and at a cost point that's not been available before. So I think everybody is pretty much in agreement that our national security would benefit from more hypersonics development faster. So we're kind of addressing that pretty significant strategic need for national security on that front, and it's growing very, very quickly.
And the tests that are being conducted, are they to test out offensive capabilities, defensive capabilities, both?
We can't get into the details of those for lots of different reasons, but we're not developing offensive kinetic weaponry.
Yeah. Okay, great. And then let's do the same exercise on what you view or your customer set today for Neutron that have signed up. Any disclosure you can make on who or what is going up would be to just give us a flavor of how this is starting off.
Look, the biggest part of the space applications market, really, at least on the commercial side, is comms.
Yeah.
So I think the majority of what we'd expect to launch on Neutron is going to be on the commercial side will be communications related. So you can think about,
there's some non-Starlink.
Non-Starlink,
yeah.
and there's some significant constellations that are being developed, and satellites are being built as we speak. And those are kind of known. Those are like Amazon Kuiper, and you've got Telesat Lightspeed, and you've got got OneWeb, you've got all kinds of different opportunities. But then on the government side, there's a lot of like we're building SDA satellites right now for Tranche 2. So SDA is building hundreds of satellites, ultimately probably thousands of satellites that are going to need launch that will ultimately be procured under the NSSL launch procurement program, of which we're getting onboarded this year for Neutron. So I think Neutron is going to be a very interesting platform is going to have a mix of commercial and government, very much like Electron has. But again, much more focused on the higher volume constellation customers and then the unique government needs for some of their larger spacecraft, as well as some of these proliferated architectures that are coming forward from things like SDA and NRO and such.
Right, right. Okay, and this is a perfect segue now into the spacecraft business. That you mentioned that you're doing some things for SDA. Talk a little bit about the acquisitions that you've made, what kind of capability sets that you have in there today, what the backlog is as of the end of the third quarter, perhaps, and then what the pipeline looks like for the next several years.
Yeah, a lot of people are very familiar with our launch business because it's fun to watch a launch on YouTube. Everyone enjoys that. But space systems represents about 70% of our total revenue. So it's the biggest part of our business. It's been growing pretty quickly. It can really be viewed in two different towers of that business today. So that 70% of revenue is comprised of roughly equally sized, I would call it a merchant subsystems business, where we sell subsystems, whether it's solar panels, reaction wheels, star trackers, radios, you name it, into other people that build satellites. And then the other half of that business is a platform business where we sell either satellite buses or full satellite solutions. So an example where we sell satellite buses, which is, think of that as a generic satellite without any payload capacity. The payload is being provided by somebody else. That's a Global Star MDA is that example of where we've entered into a bus contract, versus SDA, where we're the prime and we provide everything. Now, we don't develop the payloads. We basically procure those from third parties. But ultimately for us, we believe vertical integration is basically the path to success. And so, one of the areas that we get asked about a lot is, how it all ties into our kind of inorganic growth strategy around M&A. And certainly probably one of the greatest areas for deal activity is additional bus componentry. Sure, we've got a lot of that today through the acquisitions that we've done, including, we acquired our first acquisition was a company called Sinclair Interplanetary, which made attitude, direction, and control for pointing and stabilizing of satellites. We then acquired a software company that actually controlled those attitude, direction, control components. Then we acquired a company called Planetary Systems Corp, which did the separation systems, where you separate the satellite from the rocket. Those separation systems go on not only our vehicles, but SpaceX and ULA and others, Firefly. And then we bought a solar company called Solero to make the solar panels, because solar panels end up being one of the more expensive subsystems on a satellite. So all of those things have kind of breadcrumbed us to have a pretty vertically integrated platform. And again, we continue to see that as really the path going forward. So if you look at those various businesses, you've got our merchant component business, it's kind of one of those businesses that grows with the overall ecosystem. We've got really good market share there because of our heritage. But think of that as roughly a 20% kind of CAGR associated with it. The platform business has been growing from a smaller base and growing faster, now equal size to the subsystem, and growing probably in the 25 to 30% CAGR range. And of course, you can track the growth of our launch business because we've gone from 10 launches to 16 launches, and you do price times quantity. But the change in that one has really come from Neutron, where now we go from an $8 million launch with Electron to now a $50 to $55 million launch with Neutron. And so I think we've got all the right pieces in place right now to really kind of drive kind of the future growth of the business. And so really, if you look at to tie into your backlog question, we exited Q3 with over $1 billion of backlog, pretty representative of the mix of the overall business, but maybe it was skewed a little bit more towards space systems because of that large SDA contract that we won about a year ago. But I think you'll see, once Neutron starts to gather its momentum, you'll kind of see that skew back a little bit more towards launch, but then we'll see growth in all the different sectors. So I think it's turning out to be a pretty well-balanced portfolio.
Right, right. Let's talk maybe a little bit on the profitability of the business. So I think we're not at EBITDA break even yet. So what is the path? What levers need to be pulled here to drive the company towards both EBITDA break even and what the ultimate margin targets look like in a normalized environment? And this would you go ahead and throw in some of the assumptions, like you're doing Neutron, that kind of good stuff.
Yeah. Look, I think at the end of the day, you can take a pretty complex financial model and distill it down to a fairly simple thing, which is Neutron. But Neutron's consuming the vast majority of all of our R&D.
Yep.
It's consuming the vast majority of all of our CapEx as we drive towards this first launch, which gets you to a minimum viable product. And so the thing with a launch vehicle is, you pretty much have to be, have almost all of the, by definition, all of the infrastructure in place necessary to support your first launch. So your pad's got to be done. Now you'll increment your pad with, shiny, bells and whistles and stuff as you kind of grow. But your basic production plant infrastructure is there and so forth. So the key for us from an adjusted EBITDA perspective, it's really passing that R&D bubble that we're experiencing with Neutron. And once we get past this first launch, R&D drops pretty precipitously. It doesn't go away. It'll stick around for probably 3 years as you go through these annual block upgrades, but it'll be done at a vastly reduced R&D burn. And then a lot of those R&D resources actually pivot over into production, where you've got now air cover from revenue and all the goodness that comes with that. So if you look at the margin profile of our launch business, Electron, when we're launching a little over 1 per month, which was last year, that gives you gross margins in the low 30s with a path to mid 40s to maybe a little bit better than that when we're launching twice a month, right? So I mentioned earlier, we've got a manifest that supports, well north of 20 launches. So I think that we have line of sight to that. And that is really, you don't really get a lot of BOM cost reductions and labor reductions in a product where you're only making dozens per year. But what you do get is you get to amortize that pretty significant overhead across greater number of units. And that's really what drives your margin expansion. So I think we've got, that's really pretty easy to model. Neutron is going to look a lot like Electron. It's going to take, a period of time to really just build cadence more than anything else, right? And so it's cadence, just like it was in Electron, but it's also reusability. So sticking that early landing is super important. Because again, every time we put a neutron in the water, it's tens of millions of dollars, right? So we want to do that as few times as possible. And then it's just all about getting to, once we can get to, roughly a launch per month-ish of Neutron, we should be at our target of 50 points of margin on that business as well.
Right.
Now, there's opportunities to do better than that. And I think we always kind of, we set ourselves some pretty high internal bars, and we try to set the, bar externally fairly low. So.
Right.
And then on the space systems business, that's a business today where it's that's not a problem child when it comes to kind of margins or profitability. It's we have a lot of fungible resources. So people that can be working on a satellite in the morning and then working on Neutron in the afternoon and then working on something else that the next day. So we don't break out profitability by segment. We just show basically revenue, gross margin. I think over time, as we get more specialized and we kind of mature some of these product lines, then I think we'll probably get kind of more focused on providing that visibility.
Right. Which leads me to my next question, because today you've got 2 primary sources, but I think the ultimate goal here is to have 3, right? So I know you haven't disclosed all of that much or really anything about what you all plan to do in the third leg of the stool on the services side of things, but you've got investors in the room here that might be around for the longer term, and I think they'd want to understand. So today we're doing Electron, we're spending a bunch of money on Neutron, we get up in cadence, and R&D fades away, we get to EBITDA profitability in those 2 businesses. But then do we go into a new investment cycle, do you think?
Well, I think if you look at the cost to build a constellation business from scratch, it takes a long time and it's very expensive. We can only imagine what Elon is spending at SpaceX on that, on Starlink.
Well, a lot of these people probably know because they're investors in SpaceX,
but so I think it's more likely that we leverage our capabilities in launch and building spacecraft at scale in a very vertically integrated way to partner or maybe even acquire our way into that constellation business initially. Now, Pete's a pretty creative guy, and he's always looking at kind of building a better mousetrap and addressing kind of markets in a different way. But I think that's probably kind of longer term if you think about pure greenfield opportunities, because there's people out there, or I say people, there are people that are constellation operators that have things that are difficult to acquire, like spectrum. They've got end customer relationships, but they're completely being muscled by SpaceX's ownership of a vehicle and their ability to build spacecraft at scale, because they're now the world's largest spacecraft manufacturer, as well as being the world's most dominant launch company. So by bringing Neutron to market, we level that playing field And I think, again, we have the ability to do very much what SpaceX is doing with Starlink, but do it in a slightly different way. Probably not going after a market that requires 40,000 satellites, because that requires, raising capital that we probably can't do, practically speaking. So we're going to be very careful and targeted about what we go after, leveraging what maybe other people bring to the table and what we can augment that with. I think if you're kind of look over the next 3 to 5 years, I think what you're going to find is we're going to be taking on more and more customer programs that teach us how to build what we know we're going to need in the future. So we've kind of looked at all of our satellite engagements, whether it's a NASA program, whether it's the MDA Global Star, whether it's SDA and other things that we've got in the works. Those are things that we would have had to have developed on our own. So rather than basically do a tremendous amount of R&D burn without any support, we have customers pay for that. They're basically teaching customers in a lot of ways. So I think you will continue that. So I don't anticipate that we would do another Neutron-like heavy CapEx and R&D crusade. Probably the best way to put it, these projects. But I think it's going to be a little bit more evolutionary once we get Neutron to the pad versus revolutionary.
Right. So talk maybe a little bit about, and then I'm going to open the floor for questions. Open it to the floor for questions. Talk about the capital structure today. Everything will be as of the third quarter, of course, but cash on the balance sheet, liquidity through revolvers, that kind of thing, and cash burn maybe over the trailing 12 months from the third quarter, and what the burn looks like going forward.
Yeah, no, our historic burn is for the last couple of years as we've been bringing Neutron to market has been around. Well, if you look at from an adjusted EBITDA perspective, about 100 million, and cash has been about the same, pretty close.
Yeah.
We've been averaging between 20 and 40 million a quarter. Again, almost all of that Neutron related. So I think the cash burn going forward is a function of how quickly and how much do those other businesses contribute to offset Neutron as we get that scaled.
Yeah.
We exited Q3 with over 500 million of liquidity. We feel good about that, but we also understand it's a rocket business. And, I think if we were to drop below some, the thresholds are kind of arbitrary. A lot of it is based on our historical experience with customers when they start to wiggle when you don't have a certain amount of cash, because these programs, like nothing is less than a 3 to 5 year program in this business, right? So they want to know you've got the financial wherewithal to be there. So, I'd say if we were to have line of sight to dropping below 300 million of liquidity, that's probably where we'd want to think about kind of, going back and make sure that the coffers are well topped up.
Yeah.
And, that can be a function of not necessarily, I think people sometimes will confuse, kind of P&L kind of operating loss with cash consumption. And for us, it's CapEx in a lot of cases, right? Because building out launch pads and also investing in working capital in tails. Like right now, we're not only building the first tail, like for Neutron, we're starting tails 2 and 3. And as mentioned, those are tens of millions of dollars a piece. So you go through these periods where you're going to kind of consume working capital, right? And then there'll be periods where you're going to be releasing that. But I think, right now, I think the thing that we're all looking forward to is getting that first Neutron off, because that really is the most fundamental kind of pivot or inversion in the model, because that's where your P&L has the greatest chance to kind of just do a major flip from kind of significant losses to hopefully profitability.
Right. Okay, great. I'll pause with my questions and see if there isn't anybody from the floor that wants to ask anything. Oh, great. You got one.
What's your sense of the long-term business mix? When you look at the TAMs of the different verticals you're playing for ultimately, and the payloads and the rockets, what would your sort of vision be of the business mix?
Well, if you look at the launch TAM today, it's about a $10 billion TAM. If you look at the space systems manufacturing part of that, all the subsystems and delivering the platforms, that's about a $30 billion TAM. And then if you look at the applications, it's estimated to be closer to $300 billion, maybe more than that. And people are forecasting now that you're looking at a trillion or maybe up to almost $2 trillion TAM by the time you get up to 2040. So, and I think a lot of that growth is really anticipated to come from the from the application side of things, which is that third leg of the stool that Jason was mentioning earlier. So I think when we were trying to architect the model, 7 years ago, Pete and I both thought, well, it'd be great if we could keep launch to maybe a third of the mix of the business. for a couple of reasons. I mean, launch is a lumpy business. It's volatile, kind of by its definition. It's lumpy because you don't get to recognize revenue until you actually intentionally ignite the rocket. So you're collecting cash along the way against milestones, but you don't get to recognize revenue until you actually launch the rocket. And as I mentioned earlier, a lot of times, the customers, the delivery of the spacecraft is the thing that drives our launch cadence. It's not in our launch schedule. So you can have a launch that's teed up for the last week of a quarter that the customer can be late delivering a spacecraft for a variety of reasons, shipping, whatever, or they have an issue in test that can kind of push it to the following quarter. The good thing is the backlog never goes away. It's imminently sticky. But we kind of like that 1/3, no more than 1/3 of our revenue coming from launch across Electron and soon Neutron. And on the space system side, I suspect that as we go forward, we've got nice growth rates for the merchant business. We've got nice growth on the platform business, but ultimately the real prize is the applications. I mean, I think last year, we saw some estimates that, I think SpaceX generated, was it $6 or $7 billion of revenue already from Starlink. And we think that the services model is really what is really the most attractive and why we're pulling this end-to-end platform together. Because if you look at a lot of people are excited about growth in space, and it's going to come from new applications, but it's also going to come from existing applications that are better served from space. And so the current providers of those services are very, very unnatural, uncomfortable owners of space assets. They don't want to try to predict launch success, launch vehicle timing, on-orbit life cycles, all those kinds of things, conjunction analyses. They just want a service. What they own is a customer, and they know how to monetize that customer. And so we believe there's a huge opportunity for us to put infrastructure on orbit in a very cost-effective and timely way, and basically provide those services, whether it's either to a government customer or to a commercial customer, and basically just say, what do you want? We'll do that for you. We're in the best position to putting those assets in orbit and maintaining those. And that's where I think the biggest part of the business can be. So I think if you look 5 years from now, I think the mix is going to be increasingly disproportionate towards that services side of the business. But everything is necessary to get there. A lot of people will try to say, well, how much of SpaceX's $355 billion private market valuation is tied to the launch business versus Starlink? I don't know. If they didn't have a reusable rocket that nobody said could be achievable, then Starlink wouldn't be viable because the cost per bit wouldn't close to compete with terrestrial services, right? So that's why you really have to step back and look at it from a very strategic long-term perspective and say, what are all the pieces you need to have? And fortunately, the hardest piece is where we started. Like, I don't think we've never really seen a satellite company back their way into a rocket, but we've seen rocket companies work their way into satellites, right? So I think that once you have that hardest piece of the puzzle solved, the world becomes a much, much bigger place for you to kind of go look for opportunities.
Makes sense. Anybody else from the floor? No? Okay, I'll keep going. We've got 2 minutes left. We've got a standard question that we're asking all companies at the conference. So it's not just A&D companies, but across the broader industrials. We're asking everybody kind of opine on the top 2 or 3 innovations or structural changes that are going on in your industry and with the company, how you see that playing out over the next 5 years. And that might include maybe some trends that investors might currently be overlooking.
Well, we've talked a lot about Neutron. I think for us, that's the big driving thing that enables so much, opens up the applications business. But I think overall, I think the thing that's creating a tremendous amount of opportunity for us is, and it's only heightened by this new administration, is the fact that the old way of doing business in space is not working. So the old primes that basically were not technology creators as much as they were technology integrators and program managers, and they slapped their cost plus kind of regime on it, that's not working for the government customer in particular. And so, it's the more nimble end-to-end vertically integrated, willing to do firm fixed priced kind of deals. That's where we believe the opportunity is. So we're starting from a small base, and we're going to be just eating away at those larger incumbents over time and taking their pieces of the pie. I think on the commercial side of space, I think the big game changer is this proliferated LEO architecture, which also by definition says you can't do new space the way you did old space. You can't do things when you're building 5 of something over 10 years, costing billions and billions of dollars. That's very different than having to create hundreds or thousands of things that have to be replenished every 3 to 5 years. So that requires new technologies, new approaches to production, new approaches to capital efficiency. It's very, very different, opens up new applications. So I think it's a combination of the way that, government customers are procuring solutions going forward. And in the commercial markets, it's all about the proliferated LEO architecture, driving real meaningful change as to how things are made and kind of delivered to the market.
Okay, great. And then I'm going to leave the last comment for you, kind of like give you the opportunity to drop the mic as you walk off the stage. What's the 30-second elevator pitch to the investor base here? Why invest in Rocket Lab today? Why are you excited?
Well, I think we've talked a lot of the unique growth areas. I think that, maybe some folks in this room were lucky enough to invest in SpaceX early on, great investment. I think that we represent really that publicly traded pure play space growth opportunity at a significant discount to SpaceX. So I think that, there were a lot of things that catalyzed some of the stock price movement for us over the last few quarters. Part of it was just to kind of return a focus on space with the change in administration and so forth. But we also knocked down some very key technical milestones, getting Neutron to the pad. And I also think that people they see a valuation of, say, $355 billion for SpaceX, and some people talking about if it goes public at a much larger number. And then, what should the real credible number 2 fast chasing competitor to SpaceX be worth? If you kind of step back and look over what can we accomplish over the next 10 years, how can we narrow that gap? As we narrow the gap in capabilities, what does that relate as far as closing the valuation gap as well, right? And I think when we were trading for, $2-3 billion, and SpaceX was rumored to be trading for 355, it was pretty a no-brainer. But I think as they continue to expand and they show the value that they created in space, I think it creates a very similar opportunity, but much more actionable on our part than maybe some others.
Okay, perfect. Thank you, Adam. Really appreciate it.
Thanks, Jason.
Thanks everybody for listening in.